The road to lasting wealth isn't paved with secrets. It's paved with discipline, clarity, and time. Most people don't fail with money because they're unintelligent. They fail because they're impatient. They chase trends. They follow noise. They treat the market like a casino. But Warren Buffett, he treated it like a business, like a craft, like a battlefield where patience was the ultimate weapon. He didn't build one of the greatest fortunes in human history by chasing what's new. He built it by mastering what's eternal: human behavior, value, and the raw power of compounding. Buffett once said, "You only have to do a very few things right in your life so long as you don't do too many things wrong." That's not just wisdom. That's a financial blueprint. He didn't rely on luck. He didn't depend on predictions. He followed principles, so simple they sound like common sense, yet so powerful they've withstood war, recession, inflation, bubbles, and panic. These are not hacks. These are habits. They are not flashy, but they are deadly effective. And if applied with consistency, they can build not just wealth, but financial peace, freedom, and legacy. So today, forget the noise. Forget what's trending. Forget the idea that getting rich is about being fast, clever, or aggressive. It's about following 5 fundamental steps. 5 decisions that, when repeated over time, separate the financially free from the financially fragile. 5 moves that made Buffett not just a billionaire, but a fortress. This is not theory. This is practice. This is not motivation. This is method. If you want to build wealth that lasts, if you want to escape the paycheck to paycheck cycle, if you want to think like an investor, not just play one on the internet, then keep watching. Let's break down the 5 simple steps to riches, according to Warren Buffett. Lesson 1. Live below your means, religiously. Wealth doesn't begin with income. It begins with behavior. And the first behavior, the foundational behavior, is this: spend less than you earn, and never ever reverse that equation. Sounds basic, right? That's the trap, because if it sounds too simple to matter, you'll ignore it. But every financial empire, Buffett's included, was built on this brutal truth. If you can't control your spending, you'll never control your future. Warren Buffett still lives in the same modest house he bought in 1958. Why? Because he understood something most people never grasp. Wealth isn't what you show. Wealth is what you keep. In a world obsessed with appearances, cars, watches, status, it's easy to confuse consumption with success. But consumption is the enemy of compounding. Every dollar spent on signaling is a dollar lost from scaling. Buffett didn't just save money. He turned saving into a competitive advantage. He created a financial margin so wide that every opportunity had oxygen to grow. When others were drowning in lifestyle inflation, he was swimming in capital. And capital, when preserved and deployed wisely, becomes unstoppable. Ask yourself this: do you want to look rich today or be rich forever? Because here's the truth no one tells you. The car, the house, the clothes, they depreciate. But discipline appreciates. And the market? It rewards those who can delay gratification in a world that worships instant dopamine. So before you invest like Buffett, before you think like Buffett, you have to live like Buffett. That means treating every dollar not as spending power, but as investing power. That means paying yourself first and making your future self non-negotiable. Because building wealth isn't about how much you make. It's about how much you keep and how long you keep it working. This is where the real game begins. And if you master this, the rest gets a lot easier. Know the difference between price and value and avoid bad debt like the plague. If lesson 1 is about protecting your cash, lesson 2 is about protecting your judgment. Because money doesn't just slip away through spending. It erodes faster through misunderstanding. Warren Buffett's secret has never been complicated. He doesn't try to predict the market. He doesn't chase trends. He plays one game and plays it better than anyone. He buys value, not price. The average person sees something shiny and asks, "Can I afford the monthly payment?" Buffett looks at that same thing and asks, "Is it worth the capital? Will it grow?" One mindset leads to consumption. The other leads to ownership. There is a silent killer of wealth in today's world, and it's not inflation or taxes or even recessions. It's debt that's disguised as lifestyle. Credit card debt, car loans, payday advances, 6-year financing for a television. They don't just take your money. They take your time, your freedom, and your options. Buffett calls debt a financial anchor because while your income tries to rise, your liabilities pull you back to shore. Here's what most people don't realize. Every dollar you borrow at 20% interest is like lighting your future on fire, slowly, silently, and legally. Now let's be clear. Not all debt is evil. Buffett himself has used strategic leverage, but always backed by assets, always within control, and never for consumption. The rule is simple. If the thing you're buying doesn't generate income, appreciate in value, or increase your net worth, don't borrow money to get it. Period. That's not frugality. That's financial warfare. Because in the long run, wealth isn't just about what you earn, it's about what you own free and clear. And the more you own outright, the more power you have to invest, to wait, to walk away from bad deals, to choose your future instead of renting it from the bank. Buffett once said, "The chains of habit are too light to be felt until they are too heavy to be broken." Debt works the same way. It feels manageable until it isn't. And by then, it owns you. So what do? You develop discipline. You stop measuring affordability by monthly payments. You stop chasing shiny things and start studying long-term value. You delay today's gratification for tomorrow's power. Because in Buffett's world and in the real world of financial freedom, the goal is never to impress. The goal is to build. Lesson 3. Master the power of time. Because compounding doesn't rush, it rewards. Warren Buffett didn't become a billionaire in his 30s. He became a billionaire in his 60s. And then, he multiplied it many times over in his 70s and 80s. That's not luck. That's not timing. That's time itself, compounding over decades with ruthless consistency. Here's what most people miss. Buffett's greatest investment wasn't Coca-Cola, Apple, or American Express. It was time, uninterrupted, undisturbed, and fully aligned with compounding. Let's do the math. If you invest $10,000 at 10% annual return, you'll have over $100,000 in just 25 years. Double that time, 50 years, and you don't just double your money, you multiply it over $1 million. That's the magic. That's the machine. That's the law of exponential growth. But here's the tragedy. Most people never get there, not because they're unintelligent, but because they're impatient. They trade long-term compounding for short-term excitement. They jump in and out of the market. They chase what's hot, sell what's cold, and forget what actually builds wealth. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Read that again. Then engrave it in your financial DNA. Because the game is not about how fast you grow, it's about how long you let your capital grow uninterrupted. That's why Buffett avoided the temptation to flip companies, time the market, or jump on crypto fads. He didn't need to move fast. He just needed to not interrupt the compounding engine. And this is where most investors fail, not from bad ideas, but from broken discipline. They can't sit still. They can't stay boring. They can't tolerate silence in a noisy world. But Buffett could, and that's why his fortune looks like a snowball rolling down a hill, slow at first, unstoppable later. The secret is this: compounding is boring until it becomes breathtaking. It's invisible until it's undeniable. It's slow until it becomes a force of nature. So the question is, can you be patient long enough to let the math do the work? Can you resist the rush, the noise, the hype? Can you build a life where time becomes your ally, not your enemy? Because in the real world, the investor who wins isn't the smartest. It's the one who learns to wait without flinching. Lesson 5. Protect your reputation. Because trust compounds faster than capital. Warren Buffett could have taught you to read balance sheets. He could have drilled you on valuation metrics, EBITDA margins, and return on equity. But when asked what matters most in business and life, he said this: "It takes 20 years to build a reputation and 5 minutes to ruin it." If you think about that, you'll do things differently. Let that settle in. Because in a world obsessed with returns, speed, and leverage, Buffett plays an older and rarer game. He invests in character, his own and others. It's why his partnerships last decades. It's why CEOs trust him with their companies. It's why investors hand him billions without blinking. They're not just buying shares, they're buying integrity. You can fake a good quarter. You can hype a stock. You can game a spreadsheet. But trust, you can't fake that. You either have it or you don't. Buffett understood early that in the end, your name is your most valuable asset. That's why he lives in the same house he bought in 1958. That's why he doesn't need private jets or flashing lights. Because he knows something the modern world forgets. Wealth that isn't grounded in principle will eventually collapse under pressure. He hires people not just for IQ, but for integrity, energy, and intelligence, in that order. He partners only with those who do what they say, even when it costs them. And when he makes a promise, he delivers. Quietly, consistently, without fail. That's not just good ethics. That's good business. Reputation reduces friction. It attracts opportunity. It compounds faster than any dividend check because people remember who you are long after they forget what you earned. Buffett once told his managers at Berkshire Hathaway, "Lose money for the firm and I'll be understanding. Lose a shred of reputation for the firm and I will be ruthless." Why so extreme? Because once trust is broken, capital flees, and more importantly, so does self-respect. In an economy fueled by perception, Buffett's wealth is rooted in something older than markets: honor. He never sold out to Wall Street fads. He never bet the firm on shortcuts. He built an empire the slow way, with honesty, prudence, and absolute clarity of purpose. And that's why Warren Buffett isn't just rich, he's trusted, and that makes him powerful in ways money alone can't explain. So as you build your own future, remember this: you can earn a fortune, you can master compounding, you can learn the craft of investing. But if you lose your name, you lose everything. Protect it, polish it, let it shine not just on your balance sheet, but in every decision you make. Because in the final accounting of life, your reputation is your real portfolio. Final thoughts: 5 timeless lessons from Warren Buffett, your blueprint to financial mastery. Let's recap the 5 core lessons Warren Buffett has taught us. 1. Build wealth through discipline and patience. Wealth is a marathon, not a sprint. 2. Harness the power of compounding by giving your money time to grow uninterrupted. 3. Know your circle of competence. Focus only on what you truly understand and say no ruthlessly to distractions. 4. Protect your reputation and integrity. Your name is your most valuable asset, more precious than any dollar. 5. Above all, build a mindset that combines humility, focus, and trustworthiness. This is the foundation for long-term success in investing and in life. Now here's the truth. Knowledge without action is just potential waiting to waste away. If you want to win the trading game, dominate your investing journey, and build real wealth, you must develop a mindset that embraces these lessons deeply and consistently. Start today by committing to patience over instant gratification, staying within your circle of competence, and studying it relentlessly. Protecting your reputation as if your financial future depends on it, because it does. Harnessing the power of compounding by investing for the long haul. Embodying integrity in every trade, every decision, every moment. Trading is not a game of luck or speed. It's a game of psychology, discipline, and relentless focus. Your greatest edge isn't your strategy, it's your mindset. So, what will you choose? To be the trader who chases noise and burns out, or the one who patiently builds a fortune grounded in wisdom and character? The choice is yours. The time is now. Build your mindset, build your legacy. Because true wealth, the kind Warren Buffett built, starts in the mind. Don't forget to subscribe to Trading Mindset Lab for weekly insights, strategies, and mindset hacks that will elevate your trading and investing game.